Welcome back, everyone, to the European EUVC Podcast. As you know, we're trying to go behind the craft of building and backing venture scale companies in Europe. And today we're joined by Sean Mullaney, former CIO at Stripe and now co-founder at Seapoint, and Will Prendergast, founding partner at Frontline Ventures. Seapoint has just come out of stealth with $3 million pre-seed to rebuild the fragile financial stack European founders and also, of course, larger scale companies rely on. With the team shaped by Stripe, Tide, and years of seeing where systems break and backed by operators from Revolut, Tide, and Tynes, we're exploring conviction, risk, and what it takes to build financial infrastructure that doesn't collapse under pressure. Before we start the show, a quick note. If you're building or running a fund, you know it takes the right partners. At EUVC, we only work with sponsors we truly believe should be part of your tech stack. Please do take a moment to hear about them. And if you do, reach out, mention EUVC. It's the best way you can support what we do. Thank you so much. Starting off, HSBC Innovation Banking. If you're a founder, a scale-up, or a VC, you need a bank that actually understands your world. HSBC Innovation Banking backs innovation globally, from seed to IPO. And if you ask me, a strong banking partner like HSBC belongs in your stack. If your portfolio companies are scaling, they need infrastructure that won't slow them down. Google Cloud Starter Program offers $2,000 to $350,000 in credits, plus technical support to build better and faster. It's a key boost every fund should bring into their ecosystem, and oh my God, are we thankful to be partnering with them. Now, legal is a space you cannot lag on. Legal needs to move at the speed of venture. Goodwin's team has decades of experience with startups and funds. They're trusted at every stage from formation to exit. Goodwin definitely is a legal partner every serious manager should have in their stack. For Luxembourg-based VC, PE, and fund of fund managers, modern funds means going digital. Fundcraft gives you a full-service, digital native platform built for today's European managers. It's a must-have if you're scaling smart. So we all hear about the Middle East. How about you go there? From AI to deep tech to sovereign fund, Skytech in Dubai is where global future of tech gets negotiated. It's not just a conference, it's where East meets West, capital meets innovation, and the bold set the agenda. If you're playing on the global stage, join us going to Skytech this year. If you're gearing up for a next fundraise and want a placement agent who truly understands emerging managers, reach out to C Funds. They're a boutique placement agency that has helped GPs across Europe raise capital from top-tier LPs. We've been on the other side of the table here. They are actually good ones to work with. So I do urge you to go to cfunds.io to go and check them out. And hey, before you go, if you're looking to discover startups, raise capital, or connect with innovation leaders, do check out dealflow.eu, the EU-backed platform bridging founders, VCs, and corporates. There's no better place to find the startups that have received significant funding from the European innovation ecosystem.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
Sean, you just said I've pitched this a million times, so I'll ask you to do it one more time. Tell everyone what you're all about at Seapoint.
Yeah, so our mission is to be the financial home for European startups. So I've spent a lot of time, I'm a founder myself. I founded 3 companies back in the early 2000s. This is my 4th business. And I'd spent a lot of time with founders, both as a scout and as a mentor and advisor. And every time I talked to the founders about how they were running their business from a financial standpoint, what became clear is that there was really no clear financial stack, and there was no clear financial software out there that helped them run their business. The amount of pain and frustration they were experiencing, we used to joke in our customer interviews that the level of profanity that founders would use when they describe all of the different banks and spreadsheets and accountants and manual processes they had to deal with. Founders are not just like frustrated, they're just like emotionally really upset with the situation. And so I've been spending a lot of time with founders, and I really thought that we could do better. So at Stripe, I kind of joined when there were about 10 folks. We built the European payment system here for Stripe. And what I realized is that there was a moment in time right now where we can actually build new financial infrastructure in Europe very fast, because we have a lot of banking as a service, other financial partners that you can build on now. And I'd also just come off of a role where I was the CTO at Algolia, and we just implemented one of the first AI search engines. And so I knew that AI was one of the core kind of why now principles about how we could help founders automate finance in their business.
And I definitely think we should get into the playbook of building in an AI native startup, because you've seen both building pre-AI and building now with AI. I imagine it's quite a different journey. Maybe, Will, you could just say a few words about your first conviction moment, that the moment where you saw what Sean and team is doing at Seapoint and thought, we got to be part of this.
I guess I was lucky enough, first of all, to get to know Sean in advance of building Seapoint. We never had worked directly together on the same company, but he'd helped me out on due diligence on a bunch of companies over time. And so you get to form a view as to, who's insightful about topics. And so a number of the companies I'd looked at, he taught me different ways of looking at those businesses. And so I thought, okay, here's a person who looks at things differently. And so when he came to me with this business idea, it's funny, often as a VC, kind of opportunities are obvious in the market, but you see teams coming along and kind of all approaching it in similar ways. I think back to Mark Cummins in Pointy when he came to us first. He was trying to make offline products searchable online, and I probably had seen 5 or 6 companies that were doing it the same way, and then he came along with a completely different way, and we went like, okay, different way of doing it, insights and great team. And so the same was true of Sean. I think back to the Silicon Valley Bank moment, where everything got turned upside down in a couple of days. And we went to all of our companies and said, where's your money? What are you doing? And that was a revealing moment in time. People had money in lots of different places. And we said, okay, we're going to come back to that tomorrow. It's not stressed today. But it became obvious that it was a real patchwork of what people were doing. There was no kind of default answer. And you started then understanding that, as Sean said, the pain that people were going through to manage their finances. So really it was about finding a team that you felt was going to change things in a fairly significant way. And yeah, that was when we met Sean, and he started talking about, AI intersects with some of the infrastructure that's, now available to build applications with. We thought, okay, this is the journey we want to go on.
Now, Sean, let me ask you, you said it before a bit about the headaches of startup founders, but maybe you can describe it completely clearly. When you ran early discovery, what were the failure points that kept resurfacing? And maybe also, I imagine that the strongest example is exactly the Silicon Valley Bank moment, where we had everyone struggling.
Yeah. Well, when you talk to founders about how they run finance today, the first thing is they have a very fragmented and custom financial stack that they've built from day one in the company. So if you think about a founder who's raised 2 or 3 million as a seed round, they'll typically have a kind of old school legacy bank where they will store their venture investment. It's considered safe, but actually the user experience of the product is just so bad and so painful to use that they literally can't do anything in it apart from make a payment. So they turn to the neobanks and think, okay, well, this will be easier to use. And what they realize is that the neobanks make it easy to open a bank account, but actually the level of service and support and the AML policies and things like this means that actually the neobank doesn't help support them very well. But it has a great user experience and it works on a mobile phone. So they end up using that for day-to-day payments, basically. They then turn to an expense management and a cards platform. They're able to submit their receipts and kind of do their invoices. They turn to an FX partner in order to manage multiple currencies. And finally, they look for someone to help accept payments. So someone like a Stripe, for example. And so the typical founder has probably about 5 different financial products that they've stitched together in the stack. And their money is scattered across each of these different 5 accounts. They have to pre-fund many of them. They're constantly sweeping capital between them. They have no real-time visibility of their cash position. And all of their transactions and spend are also distributed across this ledger of 5 different banks. So then what they do is they turn to the accountants and they bring the accountants in, and the accountants spend, a lot of time at the end of the month pulling hundreds of different bank transactions from these places and trying to reconcile them, categorize them, do the bookkeeping, the VAT. But typically the accountants don't know the business. So what happens as the founder, you end up with a spreadsheet of 60 transactions you have to now support the accountant in and tell them who they are, where the invoices are. And just finally, there's no visibility really on how you're running your business and what you're spending money on. You might get a PDF a few weeks after the end of the month. And the founders really have no clue about how they're spending money and what's happening. And all of the core processes, whether it's like payroll, it's VAT, it's invoice reconciliation, it's paying suppliers, it's all done manually in spreadsheets. And the number of founders who just told us like they've forgotten to pay a supplier, it's buried in their inbox, or they didn't run payroll on time, or they're missing like half of their invoices. And the other thing is that over half of them aren't earning any interest on the millions of euros that they've received from their venture investors, because it's just so hard to get a treasury account in Europe right now. And even if you do, it's a sixth account you got to deal with. So highly fragmented. They're running this custom finance stack. And often another solution is they hire a finance person way too early. I've seen, it breaks my heart to see a founder hire a full-time finance person in the first 10 people in a company, because that's a seat that a salesperson, an engineer, or a product person could be taking.
Maybe you can comment a bit on that, Will, because you've seen many founder journeys as well. And thus here we have a startup that is focusing specifically on helping founders on their journey on this side of the problem. Maybe you can talk a bit to your understanding of the issues around finance and the importance of solving this.
Yeah, it's funny. I think, in the venture seat, you're somewhat shielded from the day-to-day fatigue that goes on with managing these things. So I think the more time I've spent with Seapoint, the more like my eyes have been opened as to the waste of time that's been going on in the background. So actually I'm motivated for many reasons. One is the financial investment. Another is just the accelerating companies where the founders aren't kind of dragged aside to kind of deal with some of this stuff. But, it seems the more you spend time kind of working with Sean and Seapoint, the more obvious it becomes that, of course, there's like should be one financial home for all of your activities, in the same way that if you've got a sales stack or a technology stack, like there's one place where everything is. And so I think people have just accepted things. They've kind of gone, that's just the way it is. Like, I just have to deal with it. I'm going to try and solve these problems. I'm trying to change the world. I'm not going to try and change the banking system. Thankfully, Sean stepped in as, Superman from Seapoint to solve the problems on their behalf. But I think they have been accepting rather than loving this. And if you think about it, like across Europe, there's just, there are thousands of banks, in any country that we're based in. You think about the 5 or 10 banks that you might go to open up, but there are thousands of business banks. There's just so much opportunity there in general, starting with startups, because they'll be early adopters of the technology and give great feedback. But longer term, there's just such a huge opportunity to change how companies manage their finances.
Well, we've done a full episode before on the power of Frontline being investors, both in the US and Europe. And I'd love to ask you just to comment a bit on, because we could get caught up in thinking this is a solution to a European problem because we're fragmented and so on. But I know that you're using your US presence and focus to also have an edge in terms of understanding what's going on in the US, what's actually important and viable there as well.
The thing that we looked at a lot when we were looking at Seapoint is just the developments within AI. So how do those apply to fintech? How do those apply to the financial stack? And so as we looked into the US market, we were seeing some things happening, but actually what Seapoint were working on seemed to be kind of more advanced in how they were thinking about it. So, the classic why now question, I think is kind of somewhat obvious, but finding a team that's thinking in a very forward way about it. Yeah, we just weren't seeing that as much in the US right now. And this is why, we wanted to work with Seapoint specifically. And even like Sean, it's worth going in a little bit about how you manage your team to embrace all of the aspects of AI, because the different founders that we work with are trying to figure out what does this mean for them internally, never mind their product and how it works, but how do they orientate internally? And I think Sean and team have been doing it quite differently.
Yeah, and our approach to solving this problem is not just create another bank account. As Will points out, there are like 5,000 places you can store money in Europe, and it's really approaching the financial processes that a founder, a startup that's scaling has to adopt. And so when you look at financial processes first, it's really clear that you reach a scale limit when you're in a business. Like if you're, a plumber or a gardener or run a coffee shop, there's not a lot of financial processes. You're a small business. And that's where the neobanks have been able to serve the market well. But as soon as you start to scale your business out, you've got, 10 or 15 employees, and you've got hundreds of bank transactions a month and suppliers and taxes. What's clear is that AI is the solution to be able to automate at scale these types of financial processes. So we've tried to look at every single one of the core financial processes that a founder needs to run their business and take an AI first approach to solving it. And one of the really exciting things in the early days is that we didn't know it was technically possible. And I think this is, if you're building an AI right now, you have to accept that technical discovery is a really important part of your product development process. Just trying a bunch of stuff and finding out what works today. And then, you have to retry as well. Every 3 or 6 months, the models change, the architectures change with agents, and you have to do a new technical discovery process to find out what's possible. And when you see something promising, you then have to double down on it in terms of trying to get users to use an early version of your AI so you can collect data, you can get real-time feedback from humans, you can create training and evaluation data sets, and then optimize the AI and the processes again. So it's a very different kind of process than a typical kind of software development process where you spec out a feature really clearly, the engineers go and build the feature, it works. So it's been a lot of exciting experimentation, and some of our early results and how we're kind of automating invoice payments, automating kind of management reporting. It's been incredible to see how great AI is at actually taking these tasks and in literally a matter of minutes automating it for founders.
And I think also, Sean's been getting the team to allocate time to go and explore the tools, which I think is a hard decision to make. So everybody's trying to ship, so take the time out to, and I think we'd all probably like to do that. But I think the culture in Seapoint is go explore, spend a week going deep on this new technology and what might that mean for us. And so I guess as an investor in the investor seat, you're seeing that investment in that kind of discipline of exploring these tools pop up 6 months later where, they're doing things that you didn't imagine that, the team would be able to do.
It was one of our hypotheses when we started Seapoint was if we fully embrace AI agentic software development, that we'd be able to ship a large amount of product with a small team in a short period of time. And, in our first 9 months, we've been able to automate 3 of the core processes, bring business accounts online, and build a product that honestly in the pre-AI era would have taken us 2 or 3 times longer, probably with 2 times the number of engineers. So it's been incredible to see the early results of it. As Will says, last week, we just did this experiment where we asked our engineers to stop building features and figure out how we can take Figma designs from our designer and automate the creation of front-end components in a production level quality. It's been experiments like that that keep our software development and our product moving fast. And as a startup, speed is the only major advantage you have against incumbents. And I'm obsessed about trying to get the team to take the time to figure out how to build stuff and find processes and hacks so that we can move as fast as possible.
I'd love to ask you both about the consequences of this, because here you say it very clearly. I was about to ask a question about what is the impact on pace of development and what is the impact on the team that you need, and thus, the recruitment needs, and thus also the funding needs, and so on. But you've said very clearly, well, here we're shipping faster and we're shipping with fewer people. So I'd love to ask both of you to reflect a bit on the impact of this on the venture model, and maybe I'll leave the venture model to you, Will, but you could talk a bit, Sean, maybe about, well, now that you are seeing that you have all of these productivity gains and the speed gains, did that make you think differently about the money that you had to raise in this round and maybe the money you'll have to raise later on and the scale at which you want to build, so on?
Yeah, and I have a kind of contrarian opinion on this, which is that, a lot of people say, okay, well, you can build faster with smaller teams. So therefore, go and raise less money, right? Have smaller teams and just deliver faster for a smaller amount. But the way I look at it is every one of our engineers, the return on investment of adding a new engineer to our team just quadrupled. And what it means is instead of bringing the same ambition level and bringing it in with a smaller amount of money, a smaller timeline, I would rather look at it and say, we can massively expand the ambition of what we can do. We can build 4 times as much product, right, in the same time period, the same team. And actually, when I think about what's the ROI of bringing on a new engineer, it's substantially higher now than it used to be. So therefore, the calculation of the value we can deliver to customers by expanding goes up, a lot. And so actually, I think the counterintuitive idea is we should go out and raise more money because the ROI of us investing in product development has just increased massively. And we should just expand the ambition of what we're doing rather than keep the ambition the same and then, reduce the number of people and capital.
Yeah. Well, reflect on that specifically, what you see across the portfolio, and then we can go to the venture model afterwards, which is a bit abstraction level.
Yeah, I'm lucky enough to have a kind of a sideline seat with the companies that we work with and the journey over the last, let's call it 9 months on this productivity question. It's funny, I remember receiving a text message like late at night from Sean. I think it was in like September last year. It was like, some profanities in there as well, but like, this stuff is amazing. I can't believe the productivity gains that we can get out of this. And it feels like since then it's kind of been on a little bit of a roller coaster, and I remember, Sean, you talking about the next moment when you realize, it can get us 80% of the way there, but the last 20% we kind of is hard because we don't know how we did the first 80%. So we're kind of going backwards again in order to go forwards. So I think, it's kind of been a bit of an emotional roller coaster to understand what is the true productivity gain. What I find interesting is, there's different types of teams. And I think some teams are very in the tools, hacky, changing tools every week. And then there's some people who are not really embracing AI properly. I think what Seapoint have got right is they're investing heavily in understanding the tools, but are thinking about production grade scaled systems. And you need that. And I think those are the companies. And when we're looking at teams, it's like, that's what we're looking for, that kind of magic intersection of this has to work at scale in production and let's say in a regulated environment. But that doesn't mean that we're not going to go super deep and be on the edge of all of these new tools. I don't think anyone could answer that question properly 6 months ago, but I think, we can now see it. But it is only those teams who are stepping back and saying, how does it change the software development lifecycle? And if we understand that and where it intersects with that, okay, now we're on the path to true productivity gains rather than, prototype productivity gains, which is where we were 6 months ago.
Sean, I'd love to ask you, because you've seen kind of the growth of startups before, obviously with Stripe, an incredible journey. Could you contrast a bit the talent that's needed for a startup that's building today versus earlier? Because I imagine that when you do experimentation, that also impacts culture, of course, and where you as a leader lead the team. But it also definitely impacts the personalities and the proclivities that you want to find people that have.
As we built the early team here at Seapoint, about half the team were ex-Stripe, which really helped in the early days. And, we're starting. We have shared culture, shared values, shared quality bar in terms of shipping production products. We also understand how to build financial infrastructure. The area where you're talking about is like when I interview folks, like I spend my entire interview talking to them about how their job has changed through the use of AI. Everyone who joins Seapoint has to rethink the role based on how AI can make it more efficient, higher quality, higher velocity. And whether that's obviously from the engineering side, I'm looking for folks that are like deeply curious about experimenting and trying new things and doing technical discovery work, because that is going to be the difference between us, like kind of experimenting, discovering and figuring out what works and what's differentiated. Not just folks who are great at shipping a feature where a product manager and designer have specified it really clearly. So we tend to skew higher in terms of the seniority of the folks that we hire. And what we're finding is that like senior engineers with the AI tools are able to own feature development and shipping and discovery work kind of end to end. Like it used to be that you need a team of 2 or 3 folks, one who was doing front end, one that was doing back end, one that was maybe doing some AI, and the coordination overheads of 3 different people, trying to time them, get them to collaborate and integrate, just slowed everything down. And now we can hire a more senior engineer who can really understand the technical design, the product problem, and individually, with the use of agents, ship the entire feature end to end.
It's interesting to hear, Sean, because we're literally now hiring on the content creation side, and I'm seeing the same thing. Like there's a whole group of potential hires that are completely ruled out for me, and if I should call them one specific group, I would almost call them journalists, because you become a journalist because you love writing and you love the craft of writing, but it's just that's not what you want anymore. You want people that love the output of writing and are perfectly fine having ChatGPT and other things doing that for you. And then what you're doing is overseeing and making sure that you produce at a higher level and so on. Incredibly interesting to see how that it plays out in the same way, but in 2 completely different industries.
It's the same with engineering. It's in like every single role, you become an expert in the craft. An individual contributor who spent years getting experience being the best at the craft. And now with AI, your job kind of turns more into being a coach, a reviewer, and the person who's coming up with a high level strategy and structure. I kind of like describe it as a senior engineer. Actually, now that you're more like a staff engineer or engineering manager, and you have like multiple junior developers who you're coaching, who are the AI agents. And your job is to give them the context, to give them clarity, and to give them the feedback so that the agents can do their job better in the future.
Sean, you had a comment on seniority before, and I see that as well. Another thing I see that I'm also very much looking for lateral thinking, so to say. I don't know if that's the right way to call it, but the capacity, because you're able to have 30 things running at the same time. Some people really thrive in doing 3 things every week, and that's what they really nail. And then there are others that are really good at having 50 things going on at one time and remember to come back to them and proceed. I'd love to hear both of your take on this. Will, you're about to say something. Go.
Yeah, just it's funny because internally in Frontline, we talk about the team that Sean's brought on. And, you know, when you talk about ability to move across a lot of topics, that's often what we see in founders. And so the people that Sean's hired into the Seapoint team, like a lot of them we would back, you know, Frontline would back as founders themselves. So they're of that caliber. And so I think, you know, Sean has hired this kind of founding type team with that level of curiosity and ability to move across tasks in each of the functions, kind of reporting into him. And that for us is a real force multiplier. So it's like having a portfolio of investments within one investment. You can see the hiring kind of bar and style is quite different in Seapoint.
Yeah, and you know, typically in a startup pre-AI, you would have probably hired a lot of junior folks to do the work. You kind of pay them less, the salary's lower, you can just throw tasks at them, they get stuff done. That's how you move fast. And I do think now when folks are doing startups, it's better to have a smaller number of, as Will said, you know, kind of generalists who could be founders, who can take ambiguity and ownership and are curious to use the new tools and discover how to do their jobs again. And I think with us, that's how we've been able to like build out Seapoint so quickly, is by focusing on more senior generalists and giving them the tools.
Can you, Sean, talk a bit about managing such a group of senior founder mentality people? Because that's very different.
Well, first of all, it's actually a lot easier as a founder when you have people that you know and trust can do the job. My role turns from, you know, often the founder can feel like you are responsible for everything and you need to spend your time like micromanaging every single person in the company, what they're doing, checking their work, making sure that they're on strategy, they know what they're doing. And that can be exhausting and consume all of your time. I think when you have more senior folks who have like autonomy and, you know, can handle ambiguity, I feel a lot more like I'm a kind of support to them. So like my meetings every week are much more like, how do I help you? Like I'm there in your service. Your job is to do the great work and I'm here to help you do it, unlock things for you. And there are obviously still things that a founder is uniquely placed to do. But I think that list is much smaller now when you have folks that are really, you know, have that founder mentality and you can trust them to like run with stuff.
Well, I want to ask you a hard question. You always say the beauty of being a VC, or one of the really important things you bring to the table, is pattern recognition, but it's also having seen what great is. And now you're seeing Sean rebuilding with a completely new model that's AI first and so on. Part of what we want as founders when we take on our investors is, of course, we want people that are also looking across and saying, that's a smart way to do it. So how do you think about that as a VC? Do you say that they're doing this in a specific way with Sean? Let's bring him in for a morning breakfast with all the other founders in the, and let's try and get some of that best practice between them? Or how do you do that? How do you think about cross-pollination of a frontier mindset like this?
Yeah, it's changing fast. It's funny. We actually got together in New York about 2 weeks ago, where we brought 13 of our CEOs to New York from Europe to meet with a bunch of our US portfolio companies and their go-to-market teams to talk about like building in the AI age and how has go-to-market changed, and just rolling in speaker after speaker to try and share those learnings amongst the group. We also did like a lightning round where we got each of the 13 CEOs to stand up and say, here's an experiment I ran that worked or didn't work. So we're trying to like get all that to happen faster, because it's this whole concept of learning faster than the speed of your own experience. And so if we can help our founders learn faster than the speed of their own experience, like they win, we win. So kind of we're obsessed with that. On the technical side, I think Sean doesn't know it yet, but we asked him to come in and talk to a group of founders a month or so ago called Building in the AI Age to talk about the software development lifecycle, what I touched on earlier, but John doesn't know yet. I'm asking him to come back in January to do like the updated version of that, because I do think that he's figured out more about how to take the changes in these AI tooling and bring them into the production grade software development lifecycle. So that is as simple as that. It's just trying to figure out who in your portfolio of companies is further ahead on a certain topic. We know that they'll be generous with their time and learnings, because like those are the sort of people we want to invest in. It's like these learn-it-alls. It's just trying to identify in the group like who's doing something interesting and getting people together. So yeah, both on the commercial side and go-to-market and on the technical side, it is our role to help people. You're in a unique position in a VC fund to see that happening and who's doing it better. And like it's incumbent on you to help your other founders by creating those opportunities to learn.
I think being a technical founder today helps more than ever, because I think one of the things, the technology is changing so fast right now, and the kind of what is possible and what can we do now that we couldn't do, a month ago, a year ago, 5 years ago. It really, I think, requires a founder to have a technical mindset to be able to challenge the team, push the team, experiment and understand. And, one of the things I enjoy the most is actually spending time doing founder engineering work with the team. And because I'm not on the critical path of shipping features, I have a lot more time to experiment and think and research and try things out. And I think that's been really powerful when the founder is setting the tone for the whole company by actually like role modeling and showing people these types of kind of activities. And obviously, I think, probably the same is true with go-to-market, as Will said. But yeah, it has to come from the top, from the founder. It has to set, I think, that culture of being open to curiosity, learning, experimenting, and, turning up on a Monday morning and going, hey, look what I hacked together this week. I figured this stuff out. And it gives everyone, the license and the expectation that they too need to kind of like operate like that.
Well, as a VC, I wanted to just get your take on this change in the market around the funding needs, or that, like, are you of the same view as Sean described, that now you just got to maximize your ambition and then, go even faster, even bigger, and that's how you build companies, and that's why the venture model remains relevant? Or do you think that there's a more important or equally important, or it's the only path, which is the seed strapping path, where you maybe take money to get the first super powerful team together, but then after that, maybe you don't ever raise money again? It kind of seems like there's a bifurcation of views, and I think that obviously the social media algorithms are best to optimize and give us energy when we only put out one statement. So oftentimes the same person will argue for one side of the coin, and then next week the other.
I think history repeats itself a little bit here. I remember when we were starting Frontline, it was kind of the cloud moment, and everybody was saying, okay, now you don't need the infrastructure, now the costs are lower. So it was more an infrastructure thing rather than a talent cost. And what happened in the early days of that is, like, it was true. People started, the entry point was much easier, lower. And so people raised smaller rounds, they got going quicker. But what didn't change is, the amount of capital that was required to create a category winner. And so that, if anything, probably increased. So easier to start. You needed as much or more capital to scale because there was more competition coming up. And so I think the same applies here. Now, what we haven't seen in the funding market here is funding round sizes go down. They're either stable or slightly increasing. Yeah, probably increasing. So I think people are maybe just factoring in, I'm going to be highly productive, but maybe, to Sean's point, I'm hiring slightly more senior people. So it's, it's a little bit more expensive. But then I know once this gets going, there's still going to be lots of other things that I'm going to need to spend money on, because the competition will be fast. And therefore, like, I need urgency myself. So in some ways, the outcomes might be bigger, but the funding needs have not declined, in my view. I think I think it will follow that kind of cloud moment. Just here, it's talent rather than infrastructure is the change.
Sean, I was about to ask you, could you tell us a bit about how do you put together the investor makeup for the round that you put together? And here specifically, I think what's interesting is that we all know that you're putting together a round of people that you think are additive to your mission and what you're going to need to build. But now with this change, have you put together a round of people that are all entirely AI natives and know how to do that type of thing, or has that changed at all?
Yeah, no, I mean, first of all, I think you kind of want a group of investors that can complement you. And I remember the thing that impressed me the most about Frontline when we kind of chose them as our lead investor pre-seed was just the primary research that Will and the team put into understanding the market and the opportunity. And they went off and done a ton of interviews, talked to people in the industry, customers, partners, and actually came back and presented to us like a whole bunch of data that we hadn't even seen at the time about folks that we could work with and the business model. Secondly, just had huge high conviction on what we're doing. And I mean, it sounds obvious as a founder, but like you really want a backer who has enormous conviction in what you're doing, because it gives them the patience and discipline to, be with you through the whole journey. And, what I also love is that, Frontline don't make a lot of investments. They're not one of these firms that have got like 20 or 30 companies every single quarter that they're investing in. So Will and the team have been like co-founders to me. They have helped us so much, and the amount of time we spend together is enormous. And it's been really important at this early stage. But then there's another group. And so we've taken on, I think we'll be up to 30 or 40 different angel investors, which is a large amount for a company at this stage. But we really see angel investors as part of our ecosystem go-to-market. So if we want to basically be the category winner for startup finance and banking, what is most valuable is when we have people who deeply believe and are invested in Seapoint's success and are willing to go out and tell founders, show founders why they also believe in what we're building. And that's the kind of best kind of PLG style go-to-market we can have with a network of folks who believe in us and are helping us kind of connect with customers.
Will, you are very deliberate in Frontline about being the lead investor, and for that reason, you always are very thoughtful about putting together the syndicate. Maybe you can talk a bit about the principles and how you approach that as a good lead investor.
Yeah, I think the syndicate, as you said, is very important for us, and so we do spend a lot of time doing it. Something we've started doing a little bit more recently is separating out the rest of the syndicate and the timing of securing that from the lead investor check. Because I think the founders are often like a little bit exhausted of the venture process. And there's a danger that they're so exhausted that they'll just take in whatever capital is around the table. So we're trying to, I think now more than ever, we're trying to say, okay, take a breath. Let's take some time. Let's figure out what the challenges are as you see them. And then let's map some people against those that are going to help against those challenges. And so, yeah, we're a strong believer in bringing in people alongside us who can help with those things. And I think most people that, you bring in from our network, either in the US or in Europe, they're always very helpful when you reach out. I remember like Ron Conway in SV Angel meeting him years ago, and he said, when we invest in you got 2 calls. And I kind of like that as a way of thinking about things. He was like, you can call me twice with something that you need and I'll do it. But like, bear in mind, you've only got 2 calls. So I think about that with the angels and people that we bring in is like, not pestering them, every week for, can you introduce me to X customer, but thinking there's going to become a point in time where we need something. That's kind of the expectation we often set with the angels we bring in. It's like, we don't need anything from you, but we might need 2 things over 2 years. And those can be the turning points. There's a hurdle, there's friction. And, it's our job as the investor group to try and get some of those hurdles out of the way.
We have 5 minutes left. I want to ask you a final question on where you're headed, Sean, and then Will, I want to give you some flowers. But let's do you first, Sean.
Yeah, well, we have a very big mission, right? To be the financial home for startups in Europe. And we're just getting started. We're kind of taking on design partners at the moment to make the product fantastic. And yeah, I mean, our goal really is to help the startup industry to start with. And then more broadly to help everyone who's operating a kind of mid-sized business in Europe and who's facing these kind of problems of financial automation and having the kind of embedded finance products. So, our much wider mission is to help all of Europe's kind of mid-market and enterprise customers with great software. And, the one thing that, I think about is the number one reason why startups fail is they run out of money before they can prove the thing that they need to prove. And, giving founders the right financial infrastructure to be able to run their business in a better way, to be able to make better fiduciary financial decisions, to have access to more capital because they're investing in wisely, to be able to help them access the capital markets. We're looking at things like lending and invoice factoring, all sorts of different financial products. Financial infrastructure really matters as leverage. And, if we can make a small contribution to helping founders have a better chance of success, that's really going to, kind of move the needle in terms of Europe's economy. I used to love Stripe's mission is to, increase the GDP of the internet. These mid-market companies are a third of Europe's economy, right? An enormous part of our economy, our ecosystem. And giving better financial infrastructure, tools, capital is a huge part of success.
What you're doing is incredibly important. And it is so good that you're focusing as your first beachhead market on startups, because then that gives us an opportunity on EUVC to give you a bit of extra love. And hopefully there'll be some people in the ecosystem that reach out on that background. I'll definitely follow up with that to you. Well, now your flowers. I wanted to just give you some flowers for the first IPO. I think at least, am I right in saying that's the first one for you guys at Frontline?
Yeah, first NASDAQ IPO in our history.
Congratulations. Maybe you'll just share the news here. And I just wanted to say, it just goes to prove exactly how powerful of a company you are at Frontline. You've done incredible work here in Europe, and now you're proving out that you can definitely do it in the States as well. Yeah,
thank you. It's very kind of you. It's certainly for me personally, I find it like very motivating, and it is a milestone for Frontline. For those who know me well, by nature, I'm not a patient person, but I think in venture, you have to be very patient. So that's a real struggle for me. But I think when you start working with a company and you believe in them so much, you don't mind being patient. So we were lucky enough to work with the company was Trip Actions was what it was called at the time, as they took their step into Europe. As you know, we work with European companies expanding globally out of Europe, and also US companies expanding into Europe. And my partner, Stephen, was able to intersect with them early in their journey as they were moving this direction and setting up base in Europe. So we invested at their Series B and kind of went with them on that journey as they kind of rolled out across Europe. And it's a travel company that survived COVID, came out the far side and got through to a $6 billion IPO on NASDAQ. So it's certainly one of those moments to be grateful for the founders that we get to work with. And I think hopefully there's many more of those to come. Thank you for the kind words.
I think we're speaking to one of them here. Gentlemen, thank you so much for joining me on the podcast today.
Thank you so much. It's been great.
Before we start the show, a quick note. If you're building or running a fund, it takes the right partners. At EUVC, we only work with sponsors we truly believe should be part of your tech stack. Please do take a moment to hear about them. And if you do, reach out, mention EUVC. It's the best way you can support what we do. Thank you so much. Starting off, HSBC's Innovation Banking. If you're a founder, a scale-up, or a VC, you need a bank that actually understands your world. HSBC Innovation Banking backs innovation globally, from seed to IPO. And if you ask me, a strong banking partner like HSBC belongs in your stack. If your portfolio companies are scaling, they need infrastructure that won't slow them down. Google Cloud Starter Program offers $2,000 to $350,000 in credits, plus technical support to build better and faster. It's a key boost every fund should bring into their ecosystem, and oh my God, are we thankful to be partnering with them. Now, legal is a space you cannot lag on. Legal needs to move at the speed of venture. Goodwin's team has decades of experience with startups and funds. They're trusted at every stage from formation to exit. Goodwin definitely is a legal partner every serious manager should have in their stack. For Luxembourg-based VC, PE, and fund of fund managers, modern funds means going digital. Fundcraft gives you a full-service, digital native platform built for today's European managers. It's a must-have if you're scaling smart. So we all hear about the Middle East. How about you go there? From AI to deep tech to sovereign fund, SkyTech in Dubai is where global future of tech gets negotiated. It's not just a conference, it's where East meets West, capital meets innovation, and the bold set the agenda. If you're playing on the global stage, join us going to SkyTech this year. If you're gearing up for your next fundraise and want a placement agent who truly understands emerging managers, reach out to C Funds. They're a boutique placement agency that has helped GPs across Europe raise capital from top-tier LPs. We've been on the other side of the table here. They are actually good ones to work with. So I do urge you to go to cfunds.io to go and check them out. And hey, before you go, if you're looking to discover startups, raise capital, or connect with innovation leaders, do check out dealflow.eu, the EU-backed platform bridging founders, VCs, and corporates. There's no better place to find the startups that have received significant funding from the European innovation ecosystem.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.